Right. I still think it's a space to like. $100 oil is very sustainable. I don't think you're going to see the demand destruction till like 150. We tend to like, and we're buyers of Exxon. We're buyers of Devon Energy. We really like them in the E&P space, and we like Oxy, and we're a buyer of this dip. You're talking about stocks that are going to just print cash in Q2, and especially something like a Devon with a fixed plus variable dividend. They're putting that cash back to shareholders. Oxy is starting their buybacks and dividends. You're seeing these companies not really put as much into the ground as they are giving it back to shareholders and buybacks and dividends. Oxy's having to do a little bit of debt reduction, but obviously it's done quite well. It's got the Berkshire backing and the Warren Buffett seal of approval, and that obviously makes people feel pretty good about investing in that space. But I am a buyer of this dip. I don't think the energy rally's done. I think it needed to take a breather, but I think some of the demand destruction, and unless we hit like 150 a barrel, is a little less of a concern.
Right. So you're still more worried about the upside than the downside here, especially back at 100 today. Let's leave it there then and pivot to the renewable space, where the solar and alternative names are also getting hit from a few key issues lately. It's not like they're benefiting from this rotation out of the traditional fossil fuel plays. Pippa, why are they lagging?
Yeah, Kelly, well, they are higher today amid this broad strength that we're seeing across the market. But longer term, as you said, many of these names are still sharply lower. Supportive policies have failed to pass, and higher rates make future profits less attractive. One group to watch is the residential home installers. That's Sunrun, Sonova, and SunPower, all up today, but in the red for the year. And they don't manufacture equipment, and they have higher margins than large-scale projects. And with utility rates jumping, the theory goes that rooftop solar becomes more attractive. But companies' cost of capital is rising, and we've heard that can be passed to consumers. But we'll get a better sense, Kelly, to the extent to which it can be passed along to consumers once earnings season starts.
Yeah, very choppy year for that ETF TAN, altogether down about 2% since January. Victoria, do you like anything in the space?
No, I'm a seller right now. I think you're also facing regulatory risk as well as potential of subsidies and tariff changes. I think there's a huge macro storm brewing. The international solar market looks a little bit better. Europe pivoting very hard with what's happening with Russia. But if you look at the U.S., you had the issue in California. You had Florida barely squeak by, pulling back subsidies. And these companies are profitable because of these subsidies and tax rebates that they're getting and that their customers are getting. If you see a change in that, that completely changes the dynamic. Not to mention the discount rate and rates going up. I think it's going to grow. I think solar is going to be a place in the future. But I think right now it's just a difficult market for them. And I think there's a lot of risk. You saw what happened when California even just moderately proposed that they might change it. You saw that stocks tanked. So I think right now I am not going long in that space, and I'm a seller of solar still.
And Pippa, you've been reporting about that, following these developments. Why do you think the tide has turned when, if anything, now would seem like the time for policymakers, maybe with some extra stimulus cash lying around, to invest in precisely this space?
Yeah, well, it seems like, the pessimism in the market around these names has just grown. And if there is going to be a rotation out of more risky, more growth areas of the market, it's going to hit this group especially hard. But, the long-term bulls, they say in 2020 was a really good year, and we're still looking back to that. So 2021 was bad, 2022 not great by any means, but they say we're still at highs. And the long-term case is only more attractive with these volatile commodity prices. It's not only the high prices, it's the unpredictability around what prices will be. And so that's why renewable advocates say now is the time to switch over to solar and wind.
Right. I mean, if they can stand on their own 2 feet without subsidies, that would obviously be the greatest case in the longer run. All right, we'll leave that space for now then and pivot towards the commodities like copper and aluminum, which are coming off their worst quarter in decades now. The metals are finally catching a bid today, but Pippa, it has been UGLY.
Yeah, it has been really ugly, and they are high today. But, copper settled at the lowest level since November yesterday, so not too high today to counteract that. And, of course, that follows its worst quarter since 2011, and this after it hit a record high in March. So the downturn here has been very swift. Aluminum, meantime, coming off its worst 3 months since 2008. And this is all about recession fears. June's ISM reading was the lowest in 2 years, and slow demand out of China isn't helping. Investors now actually hold the highest net short position in copper in more than 2 years. That's according to the CFTC. Stocks like U.S. Steel and Alcoa both down more than 50% from their 52-week highs this spring. And Berenberg saying today, Kelly, it's going to be a cruel summer for the miners.
All right, Victoria, I'm curious, which way do you break on this one? You buy them or you sell them?
I'm a cautious buyer right here because I think, honestly, prices are going to stabilize. You saw that massive spike up, but it's wiped out any gains those metals had. And if you look at the balance sheet, I like Alcoa a lot better than I like U.S. Steel. They're aluminum focused. You have a very capped supply out of China of aluminum. I do think China is actually stimulating their economy, and they're going to grow even if we slow down. I'm still thinking it's a mild recession. I think most of the damage and the pain is done. And if you look at what Alcoa has done to fix their company over the last 5 years, they've streamlined their operations. They're down from something like 67 different plants and facilities down to 32. They've got only 3 lines of businesses. They're actually printing a dividend now. These are all steps in the right direction. And I think aluminum prices, if you look at the commodity forward curve and what we're pricing in, it's a little bit more stable from here. So are we going to get these huge price swings back up? I don't think so. But I think even with stable prices at where these stocks are now trading, it's a much more attractive buy.
Shepard Smith here. Thanks for watching CNBC on YouTube.